All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Not a whole lot, to really kind of speak of when it comes to the challenge. Still in cash. No new signals on the board here as it sits this afternoon. We do have some crossover action that's happening, and I thought Coca-Cola might trigger bullish, but it is not. It's a nice chart, nice earnings gap. Fills the gap now with a breakaway candle moving above the last 3 days high. It's a nice little chart here, but is not qualifying here for a challenge trade. So, I'm not going to trade it here. If we come and look, also Raytheon is still on the board. Raytheon here. We talked about this one this morning. So those are two of the crossovers that are out there. I believe there was another one, but it didn't show up on the scan for Arconic for the challenge. But Arconic has a 3-7 crossover here as well. But consolidation component is simply too high here for it. So not going to make any challenge trades. There are no downside 3-7 crossovers that are out there today as well. Now we saw a shift here in the market. Market made this move right here. And, the last part of this move was basically due to some Fed speak where one Fed member came out and said that the current inflation level is enough for the Fed to continue to cut rates. And, so the market rallied a little bit on that. Ironically, bonds, they pulled back a little off their high. You can see bonds, pulling on back. Fed talking about cutting rates and bonds pull back. Wait a minute. No. It's normally the opposite, but tells you how much of a fear trade the bonds have been here over the last little bit. And look, Fed's going to cut more rates. It only adds value to Pepsi, Coca-Cola, Ford, AT&T, other high dividend stocks, utilities, those types of names. Just adds further value to those companies and to those names. One name that I was watching here today a little bit, McDonald's, and just chuckling because McDonald's is going to hit a new high here. Right? There may not be another company that is buying as much debt as McDonald's to go out and buy shares of their stock. And so cheaper debt, cheaper bonds, cheaper debt, easier to get debt. That's a big bonus for McDonald's, especially with how they've been just cycling that cash. And so, McDonald's isn't on the challenge watch list. If it were, it would be a bullish signal here today. But it's not on the challenge watch list simply because the signals have just not been, don't run real well with the two ATR methods. So, it's not on the watch list there, but very interesting stock, very interesting company. One where you look at everything going on out there. And most of the aspects of what's going on out there actually benefit McDonald's in one way, shape, or another. You take a look at something like Yum Brands. It's not, they don't have the same type of stuff going on, but it's holding up very well here as well. So we are seeing a little pocket of strength there with those restaurant stocks or fast food stocks. Utilities holding up really well. This has been a little bit of a safe haven here for investors, but you always have to be aware of utilities. You see even in this chart just the big red candles that can come in very fast, very hard, and without any sort of true momentum really driving it there. Okay. All right. So anyway, that's what's going on out there. The news headlines, they're swirling. It's a writer's dream right now. There's a lot to write about. From a trade standpoint, we're seeing the price action, calm a little bit. So we are seeing the VIX pull on back. Even though the market's down today, the VIX has really come off of its highs as some of the price movement is really calmed here. The VIX, one thing to keep in mind about the VIX, and I know a lot of people use the VIX to predict what's going to happen, but there is no predictive component to the VIX. The VIX is derived by looking at index options and the implied volatility on index options, right? So it's derived from something that exists out there, and it's showing kind of where that implied volatility is. And some people use it to try to predict. I don't think it's a really great predictor. Meaning, I don't look at the last 3 days and go, well, because it's done that, well, the VIX has to go up or the VIX has to go down. We can see very similar patterns many times over and see, things go in both directions. It's not the VIX driving anything or predicting anything. It's the VIX basically showing, hey, look, options are just a little more expensive than what they've been. They're nowhere near December levels, right? They're not at December levels. They're not even at October, November, levels here. And in fact, the surge in the VIX so far, has kind of just been on par with what we saw in October, a little bit less than what we saw in October, but anyway, that's where it sits. One of the things I've been interested to see today, are there any metric shifts? Right, the Bears took control of the metrics last week, and we looked yesterday, and yesterday Bulls, big bullish update, right? One of the bigger updates that the Bulls have had all year. Are they taking control of any metrics though? And when we look at the metrics, bullish percent index, it's still down today. It was down yesterday with a big move up in the market, down again here today. And so that's not shifting, at all here in the Bulls' favor. Another thing that we will tend to see when the metrics shift bullish is we will see a lot of 7-day moving average crossovers. So a lot of stocks go from below their 7-day moving average to above, and we start to push into a number of 350 to 400 stocks that are trading above the 7-day moving average. We only have 112. And if we look at the shift here in the last 2 days, right? Let's come to it. We'll come and edit the scan so we can look at 2 days ago. And so 2 days ago, stocks, there we go. So 2 days ago, the number of stocks above the 7-day moving average was 38. Very, very low number, very kind of oversold type of number. Today it's 118, just over 100. That's not a big shift. That's not the type of shift we tend to see when the metrics are shifting. And in fact, it is still a metric controlled by the Bears. Here, if we look and do the same thing with stocks above or below the 20-day moving average, right? 59. 2 days ago, we're above the 20-day moving average. And then today, we've gone from 59 2 days ago. And keep in mind, yesterday was a monster rally to 117 here today. So just not the type of move we typically see that is saying, hey, you know what, bottom's in, bulls go. Ultimately, we could see the market just only go higher from here and never stop. But when we look at what the metrics look like, that's not what the probabilities state, here. I'm on record of saying that, I kind of expect an oversold bounce Tuesday, Wednesday, and I think Thursday may be a very interesting get short type of day. We'll see how that plays out. I'm not positioned for it yet, not for the challenge, because I don't have a signal. But even personally, I'm not positioned for it yet. I'll see kind of how things, play out into the close here today. But, it's almost one of those where I'd love to see a gap up tomorrow. And, if that gap reverses tomorrow, we're probably going to see a lot of downside action. But one of those where, that would be the easiest to play given where everything is. But I'm not saying that's going to happen. Who knows? But anyway, that's, where things sit. And, the Bulls still, are kind of on the outside looking in. We talked earlier this week how back in May, a lot of gaps down, and then the market didn't go any lower afterwards, right? When the whole trade war stuff shifted in May, We just saw a lot of gaps lowered, but we didn't see heavy selling come in throughout the course of the day. And Monday, great, was a little different. But yesterday, we saw a little bit of a gap up and a little bit move up. Today, gap down, and market going to end a little bit higher here from where it gapped. I suspect we have quite a few more of these types of days ahead here throughout the month of August. Given the seasonality, given the earnings environment, and everything else that is on going out there. I was asked what might change the market. And, in terms of, hey, it's an all clear sign for the Bulls. And, it was one, it caused me to pause and think a little bit. And, when we talk about the market, there are a number of factors driving it down. The Fed started it, right? The Fed started it, but the market was able to get through that rally back post-Fed. And then we had the trade war, China, U.S. kind of breakdown, meltdown there. And that was just a little too much for the markets to handle. And the markets, went into this little snap mode here. I don't think it's one thing. I do think it's interesting to see how the market has responded to the Fed here today. I believe that if the market believes that the Fed is on its side, that it will get through trade war, China stuff. I believe that if we hear Chairman Powell basically come out and say they're cutting rates, they're going to cut rates aggressively, they're going to get them back on down, they're going to push them down to zero, they're going to look at quantitative easing measures, I think the market goes to new highs fairly quickly, regardless of what happens with the U.S. and China. I think if the Fed continues with its current posture, kind of balking a little bit, positive, a little bit negative on rate cuts. I think the market's going to kind of just, okay, I can't really react too much to that. And I think trade war stuff is going to create a little bit more volatility, especially as the market is officials say that hey, talks are going to resume in September. Right? It's not like it's a dead and gone story and, Armageddon is here because of it. So, all of these are very fluid situations. This doesn't take into account Brexit, doesn't take into account, the Chinese yuan, it doesn't take into account Iran, many of the other issues or things that are out there for this wall of worry of the market. So, I think if you're looking for a silver bullet to kind of cure things for the market from a going from bearish to bullish, I think you're looking for a Fed, tone change. But at the same time, it's going to be one of those where the metrics will shift, right? Yes, the metrics don't shift at the top. They don't shift at the bottom. But on this day right here, the market vibe turned bullish. Yep, it didn't call the bottom, but we saw a rally finally where the metrics shifted. And you know what? Right here, the market vibe didn't call the top, but we saw the metrics shift. And, it's just one of those where we will see the metric shift. If you're trying to anticipate it, there's a lot of things to watch, a lot of things to look for. But typically when there's a metric shift, it's pretty darn obvious. And, really isn't, even all that debatable. It just, boom, there we see it. And so far, that has not come into play. All right. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you tomorrow. Take care.